Welcome to CrowdAhead, the crowdfunding site. Crowdfunding is a new and exciting way to fund your business, your idea, your project, and we at CrowdAhead would like to help you on your way to achieve that. So let us start with what crowdfunding is and why you should do it. Many of us have great ideas, and we would like to share them with the rest of the world. After all, the world is more global of late. This may be a great piece of music, it may be a new gadget or app, or simply a venture or business you want to start or expand. There is no real limit to what you might want to crowdfund, but one thing is almost always the case: you need money to fulfill your plans. You will soon discover that money does not grow on trees, at least not in most people's backyards. If you have no inheritance to fall back on, or a rich family to call upon, then most of us have to resort to finding the money from other sources. So you could start by writing up your project or idea, copying it a few hundred times and sending the copies to a series of venture capitalists, banks, business angels, friends, family and government agencies. In most cases you'll get one or two answers if you get any at all. Rejection is not fatal, but you will have spent a lot of time and effort getting nowhere, hardly motivating for your new project. Rejection does not even mean your plans were not good, it simply means that it did not catch the attention. The government may want banks to lend you money to start your business, but without collateral of some kind you are simply not a bankable proposition. Venture capitalists like growth businesses with a track record. Everyone seems to have a reason to turn your great idea down. So what now? Go to the crowd. But who is the crowd? Well, the crowd is you, me, our neighbours, our friends, really the whole world. If your idea is as exciting as you believe it is, and you can present it, then there are going to be people who want to get involved. And they can through crowdfunding. Crowdfunding comes in three flavours. Donation crowdfunding, the largest in part due to the success of sites like Kickstarter and Indiegogo, who have successfully funded plenty of projects in the US. Equity crowdfunding, this is not yet allowed in the US but is growing rapidly in the UK. And finally, debt crowdfunding, this is widespread around the world. In donation-based crowdfunding, the crowd, that is you and me, put money into a project, but we are both aware that there may not be a financial return for the person putting money in. The return is a gift from a person or company raising money, or even no reward. Barack Obama funded his 2008 presidential campaign through crowdfunding and raised $137 million, not an amount you are likely to raise through crowdfunding. The gift could be anything: a t-shirt, a book to be published, music, or even a plate of biscuits. Equity crowdfunding enables people to put money into companies in return for shares, which represent a share in potential future dividends of the company and a share in the value of a company if and when it is sold. Equity crowdfunding by its very nature allows smaller companies to raise money at a time when the alternatives are scarce and very expensive, but it does carry the risk for the person putting in money that the company might fail. Debt-based crowdfunding links people who want to borrow money with people who want to lend money. Often there is a type of credit rating on these sites, but in virtually all cases, lenders get a higher return than they could get otherwise, whilst borrowers pay less. There is still a risk that the borrower cannot pay back the interest or the principal of the loan, but the market whispers are that write-offs are considerably less than those experienced by the banks. Now, the question: should you crowdfund? Well, that all depends on you, but you should definitely look at it, especially if you want to raise less than say £1 million. The type of crowdfunding you choose will depend on your business or project, the cash flows, and the longer term goals. So a good solid plan is essential, whatever route you are going to take. Anyone putting money into you or your project will want to know what you're going to do with it. Your new sports car is unlikely to be a popular project. One of the big advantages to crowdfunding for the entrepreneur is that assuming you are successful in raising your target amount of money, you'll need to have created a fan club for your product as well. Almost all crowdfunding sites work on the basis that you have to raise your full target amount to get the money. This is also known as the all or nothing method of raising funds. Quite simply, crowdfunding is a way of testing the market for your product, as well as enabling you to raise funds, a truly win-win situation. If you fail to crowdfund your product, you may want to look at the reasons why and rethink your product, the marketing, or the strategy. As an investor, should you put money into crowdfunding? Well, the basic rule is, you must be aware that you run the risk you may lose whatever you put in. If you want your money to be safe, try putting it under your mattress and hope your house doesn't burn down, or put it in the bank, though even this is not as safe as you used to think it was. If you cannot afford to lose the money, don't do it. This is not a way to supplement your pension. The second rule is, spread your risk. Don't put all your money into one project, but spread it around multiple projects. Next time, I will focus on equity crowdfunding. Join us at www.crowdahead.com.